Welcome everybody. I am John Ryan and this is the Predictive Playbook for the financial market. Specifically, a look at cryptocurrencies and the Forex in general. And we'll touch upon some of the sports industry stocks that are available like DraftKings, Endeavor, MGM, and the like. And my co-host Steve Merril is finishing up his great show over at WagerTalk today, which is the flagship show, in my opinion. It's must-see viewing. If you haven't seen that, make sure you get over there and check it out, because it's one of the best shows on the planet for sure. They have 74,000 subscribers, I think, now, and our aim here, since we are powered by WagerTalk and SportsMemo.com, is to get pretty close to that number here over the next 12 months, and we appreciate everybody stopping by to view these shows and also to subscribe and hit the bell when you do. That would be awesome and greatly appreciated. So we're going to look, just a quick look at Bitcoins. I want to save this kind of for when Steve enters the studio here. And what we have here is the breakout. So you might be able to see this line right in here, the trend line that I drew in last week's show. And at the time, we were here. And it looked like we were going to get a test of this. But the resiliency of this market and just simply failing to go down set up this opportunity, because the sentiment reading was really low. And now we've started to turn up and turned up in here. And this is kind of like a neutral reading. 60 is not anything to be concerned about. And we can shop around in here, even touch 70. It's when we get through 70 on sustained days that things get a little confusing, I think. So this was the day after the news that Amazon was planning on adding Bitcoin as a payment method and possibly other cryptocurrencies as well, as early as the end of the year. And obviously there's probably no other company other than maybe the size of a Google or the size of Apple that could actually pull this off and do everything that is necessary in the QA, quantitative analysis process, quality control, the testing that would need to be done before 100% confidence would be there for them to accept the cryptocurrencies as a form of payment. But it's further evidence that the fundamentals for cryptocurrencies are building, and they're quite strong, and they're getting stronger. Literally each and every quarter, something new comes along that adds more support, more strength, and the blockchain technology is clearly way beyond the proven process type of step. You know, it's a proof of concept that was years and years ago, upwards of 20 years ago. Actually, is when I believe it first started being worked out, and now we've come this far. And we have currency futures that are Bitcoin futures. And I like this, as does Steve, because you can short them and you can buy. So with that said, when you buy Bitcoin, you can't short it, and at least not yet. Because there's no physical asset or physical piece of paper to actually be able to do that with a broker. Maybe that's in the horizon, but I like being able to play ups and downs. And as you know, Steve and I got short at 58,000. Speaking for myself, I'm flat now. I believe he is long on his trend following models. And let's take a look at some of the other things that are going on here too, because the valuations of some of these stocks in the S&P 500 are starting to get my attention. And we keep seeing these. This linear progression here is very strong. And of course you have these pullbacks, but they're quickly absorbed because of all the money that's in the Federal Reserve System that's being flooded into the economy in the aftermath of the pandemic. And it has to find a home, and one of the homes is the market. And this has been going on in a linear fashion here for a very long time. We're now, if I can highlight the broader, we made another new high, all-time high, 44.1675 on the S&P SPOO futures, and that now is kind of failing at drifting lower. I'll put it. And we have Steve Merril in the house. Hey, Steve, what's going on?
What's up, John?
Not too much. Pretty much a lot of things are going on, really. We have the Aaron Rodgers situation.
Yeah, crazy.
We have the Olympics. We have the U.S. soccer team, where WagerTalk's Tony Mejia just sent me a couple of messages, and it didn't sound like it was a favorable outcome for our U.S. team. But I guess there's still a lot more to go. And how's your week going so far?
Doing well. I mean, and yeah, I'm actually watching more Olympics than I'd planned. I'm not really handicapping it or betting it per se. Although I might, if I keep watching it as much as I am, I'll probably start finding some spots. But I do enjoy it. I just find myself enjoying. I've always liked sports. And after doing this for 25 plus years, I don't feel like I like sports as much. It's more of a business for me, and I think it's because these regular season games, for the most part, are so inconsequential in the big picture. But I've always enjoyed playoffs, whether it be the NFL, NBA. I watch all of that, playoffs in baseball, World Series, and I think that's why I like the Olympics, because it matters. Maybe
Yep,
I'm not too involved
sure
in maybe
does.
the semifinal heats, but these finals, these gold medal events, I like, and I think that's what it comes down to for me. I like sports, and I like sporting events that matter. And there's so much content now with regular season games that sometimes you forget that. But yeah, it's been interesting. And the big takeaway for me, real quick, is that the rest of the world is catching up. I mean, we've seen that in basketball. U.S. women's team, 29-point favorite last night, only win by 9. They were struggling for a good part of that. The U.S. men's team, of course, lost outright third time in the past month, and they're now a 40-point favorite late tonight against Iran. Even Rob Vino today on WagerTalk today could not name a single player on the Iran lineup. So, I mean, I don't even know how you set a line for that game, but it's all about motivation. But yeah, the U.S.
Wow.
women's soccer team was actually a slight plus 105, was actually plus money to win the whole thing. And the U.S. men's basketball team was the smallest favorite they've ever been. So the rest of the world is catching up, to say the least.
Yeah, no question. I had a pic that I put out on Twitter. I think you actually saw. I was in women's swimming, and I know swimming pretty well. Probably the only thing I've done more of than what we're doing here. And Tori Husk is the young lady, teenager, 100-meter butterfly. I believe it was 8-1 odds, 7-1, whatever it was. It was juicy,
Yeah.
and felt really good about it. Actually, I thought, from my experience with swimming in big meets, that she was out there in the burner lanes, as they call it, lanes 1 and 2. She was in 2, and she led. She led all the way to the end. She lost the gold medal by 16/100ths of a second,
Wow.
and she did not medal. She lost the bronze by 1/100th of a second. It
Unbelievable.
was the most incredible race I've seen in years. And unfortunately, it didn't come through on the bet, but I'm still getting used to actually saying betting on swimming. It wasn't too long ago we were getting used to saying betting in game. Now, betting swimming.
Yeah,
And of course, Tony Finn, on the Manny's Pub show, how he gets, well, I guess it's either confused or carried away. He said, well, that's great if you don't want to be leading at the end of a 200 individual medley, that you could bet them in game or in pool or in natatorium. And I just kind of thought, well, that's probably not going to
Yeah,
happen.
that 30-second lag is going to get difficult. I'll tell you the in-game stuff is insane. So the NBA Finals I'm watching, and I use FanDuel a lot because their in-game odds are constant, and I like to follow it to see the adjustments. So I'll just monitor it a lot of times. I've got a direct cable feed, which it's not like it's a satellite lag or anything. I'm watching it directly from my cable feed, and this happened in the NCAA tournament as well, but it's even more profound in the NBA Finals. The live betting lines on the app were at least 2 possessions ahead of what I was seeing on TV. There were several
Yeah.
times where both teams had scored because they had the running score, and neither team had taken those shots yet. It's just insane. I mean, obviously they have a direct feed to like the league, I guess, to the NBA, but it was insane. I mean, it was a good 30 to 45 seconds ahead of what I was seeing on TV, and then on top of that, you get the rolling lag. So basically, you have to just do it like at commercial breaks or timeouts or into quarters. I mean, that's what it's come to. But I was just dumbfounded by how far they're ahead, how much of a lag there was on the cable broadcast I was getting compared to what was happening in real time. I didn't think it was 30, 45 seconds.
Yeah. It's also an opportunity to have fun with some guests that come over. that don't know that fact, and you
Yeah.
can be sitting there saying, they're going to score on this one, and then so-and-so is going to make a three-pointer, because you already know
That's a good point. Yeah.
what happened. You can have some
Even I
fun
wouldn't
until
have
they
known.
figure
Like
it out.
about a month or two ago, even I wouldn't have known it was that much of a lag. So you're exactly right. Yeah, there were a couple of times both teams had scored before I saw it, and I think I saw a missed shot. So it was like 3 possessions one time. It was just insane. Yeah, I like that. The Karnak, you could be like Karnak the Great or whatever, and predict the future.
Yeah. I mean, you'd be a true Nostradamus then.
Win some bar bets. Manny's
Yeah.
Pub doesn't put up with that. No gambling in Manny's Pub.
No. I mean, it's all paper. The gambling at Manny's Pub is all paper.
Paper trading.
Yep, absolutely.
Speaking of paper trading, I thought of you on Sunday night when Bitcoin gapped higher. And I'll tell you what, John, I went back and looked at the cash market because that, of course, is nonstop. And I've got a theory for you before I forget, so I'll throw this out to you. I haven't run this by anybody. It was just in my head yesterday. But, we've been talking about how the futures markets coincide with the cash markets, and I actually have been trying to figure out how much do the future markets move. And I think the future markets are probably just following the cash markets because they're so much bigger, and there's some hedgers that keep the prices right. But I'm starting to wonder if there's some arbitrage that's happening or is going to happen and just some manipulation. Because if you look at the close Friday night around 5 p.m. Eastern, it was around 32,000 or so Bitcoin. And within a few hours after the markets closed, it started to shoot higher, never went lower. So that when it reopened 48 hours later on Sunday evening, instead of 1 hour later like it does every night, it was literally $5,000, $6,000, $7,000 higher. And if you know you can move the cash markets, I guess is what I'm getting at. And maybe I don't, some people might be able to, but of course the Amazon news is what came out Sunday that they're going to maybe start accepting Bitcoin at the end of the year. If you know something's coming out, or if you could put something in the news, if you're like an Elon Musk or whatnot, maybe the future markets aren't big enough to make it worthwhile, but you could basically, go long at the close Friday in the futures contracts, knowing that you're going to have a gap open higher 2 days later. I mean, it's a potential problem. And we are seeing a lot of heavy moves on Sunday night, and we're seeing them a lot on Tuesdays as well, and it happened on Monday this week because of the gap open.
Yeah, I guess the gap open was largely because Amazon said that they are going to accept it as payment as early as the end of the year, and they're considering other cryptocurrencies other than Bitcoin. So I think that is what really got this thing, juiced to the upside. It obviously, I can pull the chart up here.
But what's interesting, though, is if you look at the cash market on Friday night, literally a couple hours after it closed, the future markets, it started jumping. This is like Friday evening. It wasn't like Sunday morning when that news came out or whatever. It's as so maybe someone knows. People always know, so that's why price action is the ultimate truth. And the greatest in-game, that price action is like the app with the in-game odds before the public sees it, which is my cable feed on TV. I mean, that really is the analogy there. But it was within a couple hours of the futures markets closing Friday. It just took off and then went steadily up over the weekend. So that's what got me thinking that way, because I know the news moved it, but it really, within an hour or two, the cash market started to move before the weekend. And you see the gaps in our charts because we're looking at the futures contracts there. But obviously, that gap was a steady rise over, Saturday and Sunday morning to get there. And by the way,
right.
that wick on Monday's candle is right around 41,000, which coincides to that high about a month ago in the middle of the chart. And that was also around a Tuesday, I believe, June 13 or so. It was also a Tuesday. So we've seen a lot of these crazy moves on Tuesdays and Wednesdays. We see the gaps over Sunday nights, but then we see the big volatility on Tuesdays and Wednesdays. So we'll see how it plays out tomorrow. Today's kind of been a quiet day so far.
Yeah, it's the chart's interesting because you have the inverted hammer kind of candle yesterday.
Golfing.
Yeah. And usually on these candles, the wick area, when you rally this much and then there's a profit taking or whatever, and it closes down here, and there's a wick of that size, you usually get at least a retest or a follow through the very next day. And it's kind of subdued trading. I don't know if it's because of the Chinese tech sell-off that's going on, which is causing our S&P 500, NASDAQ, Dow Jones to be going down.
Yep.
But it could be putting a pause on this. But with Amazon now behind it, it's just another piece of the fundamental puzzle that supports the long-term benefits of cryptocurrencies. So we don't know yet whether this is going to be the move that sends us to six figures. But I do think in time, and it might take years, but in time, six figures is reasonable. The demand alone from Amazon would be enormous, just huge.
And not only that, it just legitimizes it even more. Because keep in mind, the biggest problem that Bitcoin has had for years is legitimacy, and that's why Tesla and Elon Musk and some of the banks doing it helps. The ultimate legitimacy, obviously, would be the U.S. government. And that was actually the big weight against it, was the fact the U.S. government was kind of against it, but they're really not anymore. The IRS code treats it as property, which is interesting when as far as long-term gains and stuff. And then, all these countries, including China, the U.S. has to catch them now. They're all going to have their own type of crypto. So Bitcoin's not going anywhere. I think that's kind of established now. And if it gets more legitimacy with an Amazon or like a Walmart or something, that would be what sends it. But we talked about it last week here. Once again, we're not financial advisors. We're just speculators, and this is our opinion. But I'd said last week that, I've said for months that 30 was the support, and then I moved it to 29. It tested 29 last week and held. And I even told you privately, a few days later when we were talking, is that I really think that's the bottom. And we said it on the show as well last Tuesday. And even if it wasn't the bottom, the risk reward was just so fantastic because you could set your stop loss like at 28 and have unlimited run, like you said, if it goes to six figures. And I hated this gap open because I went long yesterday. My trend following method turned over after Friday night. And that's why the gap open just irritated me so much because I was already looking for a reason to be long and just anxiously awaiting. So I obviously had to pay a premium to get in, but I still did it. And, I'm going to lose a little bit more if it goes down because the stop loss is a little bit of a gap now. But it's still, the risk-reward ratio is just fantastic. I mean, you're still looking at, even if you're getting in today, you're only looking at about an 8 to 10,000 downside with unlimited upside. Because I really do think the floor is in. I think all the speculators were washed out when it went from 60 to 30. And now if you get any kind of news like an Amazon or anything else, it could skyrocket. But the risk-reward is setting up really good to the long side for the first time in a while.
It is, and I'm definitely looking to buy on pullbacks in the futures. Whether we get all the way back to 30,000, I don't know, but I think I can't say for sure. It's kind of like making a bet on a Major League Baseball game where you don't know if the starting pitcher is actually going to go because he might get traded later today. It's kind of the same mentality with this. I want to see the proof first that this is actually the move that I'm looking for, and buying dips is the right thing to do. What I have up here, Steve, I didn't mention this to you for the show, but I just reminded myself about 10 minutes ago that Apple reports earnings this afternoon after the close. And what I'm going to demonstrate here is a little case study where option volatility, which is the equation that I tweaked for in-game NBA betting, and how the real world works with this. Any textbook you can say, oh yeah, I would have bought there, I would have sold there. The earnings were great for Apple, and of course I would have bought the calls, and it would have gone sky high. But I'm going to enlarge. This is a daily bar of Apple, and this formation here, and I know Steve, you would agree, this is not good. I mean, this is a bearish divergence like you read about. Yet the headlines today are all talking about the the favorable situation for Apple for the earnings. So I lost my train of thought there because I was getting a notification, and I guess people have to know right away, right? But anyway, you have an engulfing candle here at the high. That's not good to begin with. It goes down, it rallies, but it fails to take out the highs. Look at the bearish divergence here in the indicator. Nowhere close to that. So the real trick, though, is to make money on this. Okay, and I'm telling you, if you think that Apple's going to trade down to 140 or 135 even, using options is very tricky right now because I'm going to pull those up. And I don't know if you can see the numbers or not, but you can probably enlarge your screen to see them. So these are put options on this side, call options. So simply a put option is a investment vehicle that will appreciate in value as Apple trades lower in price. A call option, it will go up in value as the price of Apple stock increases. The strike price is the price at which the buyer and the seller agree that the stock can be either sold or bought, and the purchaser of the option has that right. They can ride this into expiration, and if if Apple's trading 160, they would exercise their right to buy the stock at 148. The same thing on the put side. The buyer of the put option has the right to sell his shares to the buyer, not the obligation, just the right. And whatever strike price it is, that's the price that it is. So if it's the 150 calls and Apple's trading at 170, then you would exercise the option to buy the shares at 150 because you have $20 in profit, less your premium on the call options, which wouldn't be $20 right now. It's quite low. So these options actually expire on Friday. And this is about the most speculative thing anyone can do. So don't, go out and even try this. But it is worth watching because I'm telling you, as I'm sitting here, you can be dead right and say the right thing and predict the right thing. And let's say in our hypothetical that we're expecting the earnings to disappoint, or that the market is so heavy they can have record earnings and the stock will still go lower, which has happened on multiple occasions with Apple in the past. So let's say for the example of the show and this little case study, let's say that we think it's going to go down. Let's buy, and Steve, you don't mind writing this down so I don't forget. We're going to buy the 142 puts that expire Friday. That's July 30th of 21. 142 strike at $8. Let's say, to be fair, $1.18. So if we buy 10 of those, that will be $1,180 of maximum risk. That's the most you can possibly lose. Now, we're trading at 146 right now. So if Apple goes to 142 at 9:30 a.m. Eastern Standard Time tomorrow, you will have lost money. Even though you were right on the call on the downside, you will have lost money because the market will take out all the implied volatility, which is all the implied uncertainty that the earnings are going to be either good or bad or better than expected or worse than expected, and remove that from the price. So you can have a situation where it opens up at 142 tomorrow morning, and those options might be trading 25 cents. Which means that you've lost roughly $900 overnight, and actually you made the right call. And we can do the same thing, Steve, with the call side real quick. So we do, let's see, 146 it would be at the money. That's another term that we can ask Tony Finn about. At the money. That would be a good one for him to, or in the money or out of the money.
At the money. I want to actually, I even have more fun predicting what he's going to say. He's been pretty clean about it. He's actually been pleasantly really good with that segment. It's surprisingly, John's gone a lot better than I expected. He's kept it clean. He's kept it entertaining. I'd say at the money is when you go to settle up with your local bookie every Tuesday morning after Monday Night Football.
Yeah, I think at the barbershop. Yep,
there you go. Yeah, it's when you go to get a haircut and settle up at the money.
Yep. In fact, he probably knows a barbershop that's named at the money. But let's put down the 152 and a half calls. And these are very liquid. What I mean by that, there's a lot of these trading. I think on the call side alone, there's close to 700,000 of the call options that you're looking at right now on the board. So let's see, what did I say? 152 and a half is trading at 103. So that would be for 10 contracts. Each contract represents 100 shares. It would cost you $1,030 plus a little bit of commission. So those are the two directions, and I just want to plot how this works because when you do these trades with 3 days to go and implied volatility of 51%, when a normal pricing is probably closer to 18%, you're paying tremendous prices for this. This is like overvalued. This would be like the Yankees playing the Red Sox in Boston, and the market has the Yankees priced as minus 400 favorites. That's how overvalued these are. But there's so much uncertainty that nobody really knows which direction it's going to go or how much, that they're willing to pay these exorbitant prices for that opportunity. So it would be similar to a Yankees-Red Sox game where the Yankees are favored by 400, and then you get paid extra for every run they win the game by 4 or more runs. And I hope that made sense. So if they win 10-0 over the Red Sox, you make a fortune. If they lose 10-0, you lose all the money that you put to buy the option.
Right. And I mean, the options also are kind of like what I like about futures contracts is there's a lot of leverage built in as far as, the volatility. And if you look at like the VIX right now, the VIX is like 7% up today. The S&P is up like 1%, because the VIX is basically the S&P inverse, but it moves a lot quicker and heavier. We saw that last Monday. It moved like 30-some% in one day when the S&P had just moved, 3% or something. And also keep in mind with Apple, it's basically the NASDAQ. I mean, they're about 80% correlated over the past few years. I think right now it's like 67, but if you look a month ago, it was like 83%. If you go back to 10 years ago, it was 85%. So it's always, Apple is the NASDAQ. I mean, they move hand in hand. And, it's even a good chunk of the S&P as well. So not a coincidence that the S&P, NASDAQ, and Apple are all down today. The NASDAQ is down a little bit more than the S&P because Apple is a little bit more the NASDAQ than the S&P 500. So that'll also, it's basically, that's how big that company is. I mean, it's basically the stock market right now.
Yep. And I don't know if you can see the far right part of the screen, but that's the current calculation for the implied volatility of the options. So it's 51.1% for the ones that expire in 3 days. Basically a week later, it's down to 37, then it's 33, and you get back to what is normal market conditions for Apple is way out there. Actually, it's pretty much 30%. Historically, this is high. Historically, Apple on a normal market day, out of the money expirations would be somewhere around 22%. So again, it reflects the uncertainty of how much further is this market going to go, or is it going to turn around and go down? And people use these options to hedge. They also use it to speculate. In our case study here, we're using it to speculate because I want to show that you can be dead right and end up losing money. And I know it's a crazy concept, but I actually hope that Apple either goes up to 150 or it goes to 142 after the earnings are released, and that'll happen.
Yeah, I mean, it's priced in. There's a lot of smart people in the financial markets, and they're all looking at, the possibility of a big move, and it's priced in. It's the same thing with the meme stocks, whatever you want to call them. Those options are off the chart. I mean, it can move like 50%, you still don't make money. It's insane. I mean, because they know it's got crash potential written all over it, and it's hard to short them. So everyone's protecting to the downside with put options, and it's priced in accordingly because it's a two-way market.
Speaking of which, I just pulled up GameStop. And this is, I'm just reporting this. I wouldn't, even with 40 years of experience of being a trader, I would not touch this with a 10-foot pole.
What about with Rob Vino's money? Would you use Rob Vino's money?
I think I would. I would. Yep, because he's got way too much as it is, and he wouldn't even know it's gone.
Rob Vino told me today he wouldn't even bet on the Iran-USA game with my money.
Oof. Wow. That is a crazy game. I don't know if you take the points or...
I just don't. I mean, it's like my initial thing is if you're going to play the USA, this is the game because they're off a loss and they have a team they can beat by 100. But then again, that's just a pure fundamental handicap. It's like I have done no math, and I'm a math guy just like you are. So it's like, how can I touch a game which I'm not a math guy? There's actually... It's kind of like Bitcoin. I mean, other than having the graphs and the technicals, I have no way to price Bitcoin. I don't think anybody does. It's very hard to say what the fundamental value of Bitcoin is. And to prove that point, there is no fundamental value of Bitcoin because when something goes from 10 to 30 in 2 months, 30 to 60 in 3 months, and then 60 to 30 in 2 months, there's no, someone has been drastically wrong like 3 out of 4 times there. So, it's the same thing. It's kind of like
that
this
stock. Yeah,
Yeah,
this is
exactly.
GameStop.
No, but what's funny now, that's GameStop. I don't know what the analysts are on that one, but we've talked about AMC has done the same type of move, and it went from like
Yep.
10 to 60, and like the consensus analyst was $5.50 for like the 10 experts that cover it, was that it was worth $5.50 a share as it was sitting at 60. So it once again shows that price action is the truth, but it's not exactly the accurate truth, if that makes any sense whatsoever.
And this is a textbook example of a short squeeze, which Tony Finn did a marvelous job answering that one, I believe. I remember right. As you said, to his credit, keeping it completely clean is a credit to him. It's a real testimony.
It's a victory in itself.
It is. But you can see the volume here. These bars right here represent the volume, and look how it dwarfs the previous. I mean, this is short. This is movement that hedge funds were short the stock and then got pushed out for whatever reason. I think it was blamed on Robinhood back then or whatever it was, and they had a cover. So there's everybody in the world is buying, and there's no seller, and that's what creates these monster moves. Because the market has to keep raising the price to find a willing seller, and it's it's another thing that, in my opinion, you stay away from. And it's always better to say, "Boy, I wish I would have done that," as opposed to, "Oh, damn, why did I do that?"
Well, and the bottom line is that these companies are not worth what their current stock price is saying they're worth. And, like AMC,
right.
once again, is like, it's currently at 37.5. Its high at one point was 77 back in early June, like a month and a half ago.
Yep.
And the analysts at the time were saying that it's worth $5.50 a share. Like, these are the 10 experts that know more about AMC than anybody. They cover it for a living. They're saying this company is worth $5.50 a share, and it was trading at $60, $70. So the problem is, well, if we know that, it's kind of like Dogecoin. I know Dogecoin is going to be zero someday in the future. But once again, I can't take advantage of it because, first of all, you can, right. With AMC, you could do put options, but those are priced to the extreme for reasons we just talked about. It's very difficult to short it. And in the short term, it can be wrong for a while and you'd lose money on those shorts. It's very expensive to short. And with like Dogecoin, there is no way to short it. You can only buy it and then sell it. So that's why these markets, that's why I love the futures markets once again, because the future markets are 100% balanced at all time. There has to be a buyer long for every seller short. The stock market, there's a buyer for every seller, but sellers aren't short. That's something people forget. A seller is selling something most of the time that they already own. You could go short, but then it gets very expensive. It's not efficient. So yeah, I mean that's why these prices can stay high. The other thing to keep in mind, we've talked about this, but all these day traders, Johnny become latelys or whatever, that came in about a year ago now, last summer during the sports shutdown, when all the stimulus checks hit, they didn't need the money, so they put them into trading accounts. Robinhood, which is going public this week, had, and all these other brokers had like a 30% increase in new signups, and a lot of it was guys that couldn't bet on sports, had money to spend. These people have not lost yet because everything has gone straight up since then. So, they haven't had to sell. But what happens when it starts to crumble? We have a panic sell-off on these. It's going to drop so fast. Or when the market eventually has a semi-crash or whatever, or Apple has a bad turnout. Apple keeps dropping. People have to cover that. It's not about selling stuff that's doing good or bad. It's about having to sell winners to cover losers sometimes. And these day traders have had no losers yet for the most part. So it's going to happen fast.
That is the danger.
It's going to happen fast like it always does for that reason.
Because the simple reason is the lack of discipline with the new day traders, and it's not. I'm not making fun of them. I'm not putting them down.
No, it's
but
tough.
you literally. I always said this. You literally have to get your face ripped off financially to be a good trader. If that hasn't happened to you, it's like they say with finding the right person to marry. If you haven't had your heart broken like several times,
good analogy. Yeah.
Then you're probably not quite ready for it yet. But
and whenever anything in life seems too easy, it's a red flag, and it's been too easy for these people because it's just buy, sell at extreme profits if they sell at all, which I don't think a lot of them even sold yet. And that's another thing we talked about. It's like everyone puts 99% of their effort into the buy indicator. You and I don't. We put a lot into the sell. We have a game plan. But how many times have I said have an exit strategy? Like with Bitcoin, when it's dropping 5,000 in 15 minutes a couple months ago, what's your exit strategy? When AMC or GameStop are dropping 30% within an hour one day, which is going to happen here in the near future, You don't want to be deciding on the fly if you get in at 28% down,
Yep.
35% down, 90% down. You need to know the night before it happens. Most people, I guarantee you 99% of these new traders do not have that. If you were to ask them right now, when do you get out? Like I could tell you right now when I'm getting out of my Bitcoin long. I know exactly when I'm getting out.
Yep.
It's not guesswork for me. It's so
the most dangerous words said as a trader are, the market was down, but it's going to come back. It's going to come back. Well, guess what? There's times that it doesn't come back, and it's just that's where the discipline is. Human nature is you don't want to lose, right? So you have a net, or you just have a plain loss on a trade, say in crude oil, and you resist what emotion is putting into you. The emotion is that I don't want to lose. I'm better than that. I'm a winner. But the market doesn't give a crap whether you think you're a winner or not. And it'll move accordingly. And a lot of times in trading futures especially, it will go against the general public and that sentiment. It's very, very similar to sports betting where you get public enthusiasm on a team. We're seeing it right now after the All-Star break. And I happened to turn on the WagerTalk Today show just to kind of say hi to you guys. And man, my timing was great. Bob Vino is mentioning my name. And of course, every time I hear my name on that show, first I'm flattered. But then I kind of was like, was it good? And he was talking about Baltimore. So Baltimore, since the All-Star break, has been the best team to bet on. And granted, it's an 8-game sample size, but nevertheless, you would have made $581 on those 8 games, betting $100. So that's the sentiment that I'm talking about. And one of the worst teams is a team that the public, I think, fell in love with going into the All-Star break, the Toronto Blue Jays. And they went 1-5. And the only team worse is that Double-A team down in Arlington. What are they called again?
Yeah, the Rangers, who play the biggest money burner in baseball tonight, the D-backs. And I just realized I got to jump and do the baseball show as we speak. We were running behind on WagerTalk today, and I thought we'd be late on that show, but I just realized we're going live in like 1 minute. But yeah, so check out WagerTalk today for Rob Vino's baseball. I gave you a shout out for this show at the beginning as well, and then we did a bonus episode because the internet crashed on us. But yeah, I'm going to jump. I'm going to do MLB first pitch right now, WagerTalk TV, and then catch Manny's Pub at 4 Eastern tonight with Tony and Rob.
Yeah, that's awesome. Make sure you catch this MLB game, guys. And on behalf of Steve, myself, and the Predictive Playbook, may all the wins be yours.